Okay, all right, guys. Apologies for dropping in a little bit late. Had some technical issues. How you guys doing? Hope you guys had a great week. This is David here, and I'm just going to be doing this again, sharing what potential opportunities we have ahead of the new week. All right, it was a pretty interesting week for the USD. If you guys remember that we shared we shared the last time that we had the last time that we did this, we were like we're looking at the potential, and I'm like one of the things we always try to do is to begin with the USD because it carries so much weight in the currency markets, and interestingly, not even just the currency markets, like whether you're trading stocks, you're trading indices, because a lot of those assets are actually benchmarked against the USD. So even Bitcoin, for instance, the big chart that everyone looks at is BTC USD. Not a lot of people look at BTC Euro, whatever, other combinations. So it always makes a lot of sense for people to get started with looking at the USD index. A little bit of a caveat here: the USD index is the cost of the USD against a basket of the major currencies of the world. It doesn't necessarily include every single currency, so it's not totally reflective of the dynamics of the USD against um, every single alternative asset. But that behavior of the USD index is sufficient enough to give us indications of what we could possibly be looking at ahead of the new week. Okay, guys, so this is what the USD index looks like. As you can see, last week we saw that we had a delve down of the USD, a bit of a weakening and a strengthening during the week. Now, if you now come across a lot of the USD pairs, checking them out, taking the Euro USD for instance, looking at last week's performance, we could see that USD gained strength, and then towards the end of the week, some slight weakness. If you do recall, we had last week um, um, we had some sort of bias towards the strengthening of the USD. It's not entirely surprising as we sort of headed into the week that overall the USD gained against the basket of a lot of the currencies of the world. It's reflected here in sort of like this sort of move up during this period. Okay, this move up, and towards the end of the week, Thursday, Friday, some level of correction of that sort of early on weak strength of the USD. Now, what we're going to be looking at is what we potentially can see this week. What kinds of potential moves can we see this week? We're going to look at what we can see across different assets. We're going to look at Euro USD, USD JPY, GBP USD, USD CAD. We're going to look at S&P 500. We're going to look at gold. We're going to look at Euro GBP. We're going to look at Australia, and all of this we're going to do in 30 minutes. So it's going to be like a very fast sort of session of what we're looking at. Okay. So for Euro USD, last week we spoke significantly about the um, 1900 sort of resistance. Now, we as you can see, these sort of areas have been marked out before, and I was talking about that area being very key because this resistance was also a proud. I mean, you had like several previous periods in previous history, near-term previous history, where this level kind of held, and you can see that it held kind of like around August thereabout, end of July going into August. It also held around sort of like June thereabout. So we kind of like had that, and so heading into the week, as price approached that level, it was clear. I mean, heading into last week, it was clear that that level was going to be a significant level. Okay, so not entirely surprising that heading into that level, we saw this. So that level held, price went all the way down here. Okay, and gave about 91 thereabout pips thereabout, interesting opportunity. Now, as we go into the week, we still will be looking at the general potential of what could likely happen. Price is currently nearing, it's about 10 pips away from the 1800 level. This is going to be the next key level. Okay, so we're going to be looking at the behavior of price around the 1800 level. Okay, so we've had now, if we were to take 1900 to the 1657 level, these two levels have formed a key sort of range for price since in and around this period thereabout. So in and around this period thereabout to current price, and this period we're talking about like since end of June, okay, to now. This period has kind of with price usually it's kind of ranging between these levels. Now, if we are able to see a cross below of the 1800 level, we can anticipate price to drive further down towards this level. Now we look at the higher time frame to get a sense of what that could look like. Okay, so going on the daily now, you kind of get a sense that okay, price is making resistance, lower resistance, and sort of it been making lower resistances, and around this 1900 level, you had price hitting this sort of pin bar. We spoke about this as well, this pin bar, and coming down. So if price is able to successfully break through 1800 level, we can anticipate that this asset is going to go significantly further down. 1800 level now becomes a key psychological and sentimental level for traders, whether even in the short term or in the long term. So during the week, price is just about 10 pips away from this level. So start of the week, that's going to be one level we're going to be looking at. If price is able to comfortably break through this level, we look at 1750 as the next potential level. And if you recall, we had a Fibonacci plotted from the swing low here to the swing high here, and we looked at the potential of the degree of, if you take this swing low to this swing high as the move of price, we now looked at how far potentially can price descend. Okay, so we're doing like a confluence of analysis here. We're looking at okay, should price break through this level, this 1800 level, okay, and further descend? How far further can it descend? We can see the 38.2 correction level of the Fibonacci around here, coinciding with a price around let's just say 1680 thereabout, below 750, and we can see the 50th level here at about about 1480, close to that thereabout. Now that's quite a number of pips away from here. Should we see that happen? Now, in the near term, should we see this level hold? Okay, we want to see price try to approach back towards 1900. Okay, and it will now be a case of where does price go after that. So clean breaks are very important. You have to watch out for fake outs. It's very key. You have to watch out for fake outs, and that's something I'm going to be looking at. Now, moving on to the USDJPY, we had already planted out this sort of we had this trend line here, but of course during the week and during this sort of weekly performance, we had different resistances that So in the near term, so what we've seen, okay, in the near term from this last 2 weeks, so this week and this week, if you have to take that sort of price, is that we could say we've seen this. So what we've seen is we've seen resistances rising, okay. So we've seen this, which kind of in the near term sort of changes the dynamics in terms of what price is doing. Okay, so this is what we're seeing here at this point in time. Now you're seeing this rising resistance and all of that. Now price has now and this is sufficient. This is something that you can see over the last 1, 2, 3, 4 weeks. Okay, over the last 4 weeks. So this is 4 weeks of price action with price trading between what appears to be this channel. Now, in terms of looking at what the potential resistances or supports can be, okay, last week price created a new resistance around here, okay, which now sort of adds to what we can be looking at. We're looking at 110.43, okay, here now. And price also in the week that went created a new sort of near-term level here, okay, which was almost at the start of the week thereabout, now, which is around 109.51. Now we want to watch out for this particular near-term sort of channel for intraday opportunities within the week. Okay, when you go to the shorter time frame, okay, if you guys notice, I'm doing a lot of change within the time frames here because I I usually try to use higher time frames to get it the larger view, then go to shorter time frames to sort of get key places where price can break through. Now, here you find that price would need to from the shorter time frame break through some key resistance level to if this sort of scenario of this last 4 weeks scenario of sort of rising resistance and rising support should form. But certainly, okay, in our in we within the sort of within this trend line, within this channel, price is more on the demand side of that channel. Generally, whenever price is lower, closer to the trend line, lower trend line, you say, okay, price is on the demand side. Whenever price is closer to the upper trend line, price in the supply side of it. So price appears to be more around the demand side. If this coincides with the strengthening of the USD is on the USD is on the what's it called now? It's on the base side. Now, so because USD is on the base side, if this coincides with the strengthening of the USD, we can see momentum of price to approach 110.14 and possibly even 110.43 on the way up. Remember, trading, if you want to trade this type of analysis, it will be useful for you to consider the alternative scenario because should we have a weakening of the USD across board early on week, you want to ensure that you find stops just outside of this channel or whatever it is that forms this channel. So you can look at 109.59 as an opportunity, but preferably, in trading channels, I usually prefer that price is sufficiently at demand or supply level. As we can see here, price is already advancing. Okay, so maybe as we get early on in the week, any indication that price could discount itself a little bit and this particular behavior still continues to hold true would give confidence of actually getting into the trade and looking at higher levels. Okay, guys, quick look at GBP USD right now. All right, interesting thing happened in GBP USD last day of the week. Price formed a pin bar last day of the week. Pin bar coinciding with an upper side trend line. Pin bars usually, and this is what I mean by a pin bar here, this candlestick here. Pin bars usually coincide with a change in sort of the momentum of price. So if you have price traveling up, you find a pin bar, especially around a key resistance level or a key supply level, support level, you want to think about the potential of price reversing, at least in the near term. This is on the daily chart. So if you went to the 4-hour chart, okay, then we now kind of try to see how this potentially can play out. 38.69 is a key level. Okay, as you can see, resistance here, resistance, touch it, all this way. 1, 2, 3, 4, 5. This demonstrates that price usually reacts around this level. All right. Now, so if during the week, okay, we are able to find that this level holds successfully, okay, this level holds successful. I think that one thing, because I could see a trend line here connecting the last 1, 2, 3 weeks, okay, a rise in price. I would think that it would be wise for you to see a breakout of this trend line to actually get a sense of, okay, this particular upper trend line that you see is still active. So a breakout at 37.77 thereabout, price traveling below this level in reaction to this sort of higher term change in price is going to be very, very key. So we'll be on the lookout for that. And if price is able to break this level, it could potentially approach 37.10, which is about 67 pips away from here, and further down to 35.94, which is quite a lot of pips. I can't really calculate it now, so just look at it, about 180 pips thereabout in week. So we're going to be looking out for those opportunities. Now, if price refuses to respect this, okay, any breakout above of here has potential for price to travel much higher. Okay, that would mean that it will change the structure of this the behavior of what's going on if this trend line is not respected, and we could see significantly higher moves of price. Always plan your trades appropriately, plan the entry to the exit in terms of risk and in terms of profit. Always ensure that only a fractional amount of your account size is risk per trade. Okay, guys, we're still looking at the. I quickly went to the line chart a little bit here so that it kind of clarifies this. So I took it away from the candlestick chart to the line chart a little bit. Okay, what you can see here is you can see a bit clearer. Okay, the sort of resistance and support relationship. Price. Okay, almost like an entirely clean sweep of, and we spoke about this last week as well. And I imagine that some folks would have gotten some opportunity around the sort of USD strength that happened last week. Now, resistance support, a turn of trend around here, and this is on the weekly, by the way, and that sort of resistance support dynamics now changing. Okay, a few things that we have on this chart that you can note is we were able to draw with you from swing high here, and you see this better because on the candlesticks you see it better, but from swing high here to swing low here, and price, we can see that price is around the 23.6 correction, thereabout, just above the 23.6 correction. Now, if I put it back on the candlestick to just basically try to observe the price action, this is the 4 hours. Okay, so you look at what happened last week. Price surged and corrected itself a bit. Now, within the sort of grand action of price here, one of the things I think that you can see rather clearly is that resistances, okay, and supports are rising. Okay, that as always, as I always say, is the first most important thing that you need to look at for the structure, the relationship of resistance and support. Price appears to be at a correction move of a prior impulse move here. Okay, that seems to be setting price up for a further drive up of price. Now, remember, trends are not always linear, so you usually have sort of linear on non-linear sort of behavior of price as they behave in this way in which you understand. So it's not like it's always going to be resistance support, kind of like linearly like that. But what we do see is that price does not behave too far away from that fact. It doesn't behave too far away from that fact here. We can see here that you got resistance, you got correction, impulse, correction, impulse, correction. Now this now begins to become the most likely direction if this current system of price action continues. But even within this particular system, this move up, we can see here that we can have sub trends in here which form the even a totally sort of a shorter term and this is what we talk about when we talk about like price having fractals, a shorter term sort of behavior of price in and around that. So we already have kind of like the bigger view, but when you reduce the time frame, you can now see a shorter term. So what I see here is that if price should break some of these levels, the next near term interesting level is 2700. If price should break 2700 ahead of the week, then we could possibly be looking at 2800. That's 100 pips away, 100 pips opportunity, and potentially 2940. Interesting opportunities there. Now remember that for every scenario of price, there's always an alternative scenario, which is why we have stop losses when we trade. Okay, so we should always build our trading into we should always have sort of like a sense of that alternative scenario. So if price refuses to do this, okay, if we see that this and price actually begins to travel lower to 2570 and 2480, this invalidates that analysis. Okay, well, we basically look, or we continue to watch this vis-a-vis the USD index, S&P 500, guys. S&P 500. Last week I spoke about how sort of the linear relationship of the S&P 500. As of last week, the S&P 500 was at another all-time high, and at that week I said, which was why I kind of mapped out all these levels. I said, you know what, guys? For every impulse, there's always a correction. So price was trading at that impulse. Okay, significant impulse. And when you look at the move from here to here, so it was at an all-time high. This was last week. Okay, this was price behavior last, and I said you know what, price is at an impulse. So what you want to see after a strong bridge up move is for price to discount itself. That's the wise way to trade. So you look at price discounting itself, or some traders like to call it pullback, or some traders like to call it BPC, breakout pullback continuation. So price breaks out, pulls back, then you look for opportunity to continue once you have an established trend, which is exactly what you have here. What you have here is a very long S&P 500 trend in which price has been behaving in this way. So I mentioned as of that time that we should look at potential levels where price could pull back from this height. And boy, did price pull back. Price pull back to 4,500, pull back further to 4480, further to this level. Now, if we find that price, now, of course, price is now along a key support level, a key floor, okay, and you can see some level of reaction of price around this level. If this level holds, so you can give a bit of allowance to watch if this level holds. If this level holds, then you can seek to join in another potential strengthening of this asset. But we need to watch out. We watch out for that. We should notice that in terms of diversification, a lot of the assets that I've mentioned before are majorly the USD crosses against a major economy, which means that a lot of the USD has a lot of influence on those assets. It makes sense for you to diversify by looking at other assets. Okay. Now, what else are we looking at, guys? Okay, I've got 2 more minutes to do this. Okay, so let's see. Let me just pick one more asset and see how we can end. Yeah. Okay, gold. Okay, gold, guys. Now, quick look at gold. This week, I remember again last week that we cited this level as a very key level, 1831. We mentioned about this level, 1831, as a key level. Why did we mention about this level as a key level? Resistance. Here you can see the reaction of price previously. The strength of a level is a function of you can call it a function of three things. Number one, you can look at the how many times our price has reacted historically to that level. Number two, you can look at what particular time frame. So the higher the time frame, the stronger that level is. So I'm going to take a level more seriously if it's on a higher time frame than if that level is on a lower time frame. Okay, so I took this level as a very strong level. Price basically from that level, from the very start of the week, reacted all the way down. Okay, this level held and price traveled all the way down. Okay, we see other levels around here, 77, 71, and 17, levels. So we begin to watch out for these levels ahead of the new week. Looking at it, sort of like the longer term structure of price. Okay, I did share that we've had falling resistance, successively falling resistances. But I also shared that interestingly about the price, that this is not a linear trend where you basically see rising resistance and rising supports. No, we have falling resistances and we have rising supports. That's not a condition for linearity. So one of the things you want to basically watch out for is you now look at key levels. Okay, the now if we find that price drops from this level 1771, we can see price travel potentially towards 1717 again. We look at the USD vis-a-vis all of this. Okay, I hope this has been useful. This is much that I can take from here. I hope you guys find this somewhat interesting. If you have any questions, you can always reach out. And if there's any comments or whatever you want to share, I'm always excited to listen and excited to share. I wish you guys an amazing trading week. This is David signing out. See you guys next week.